Good now, revolutionaries, and welcome to the Rise Up Morning Show. Today is Wednesday, January 7th. It's Web3 101 Wednesday, and oh boy, do we have a big show for you today. On the docket, among other things, JP Morgan dropping a hammer on BTC, XRP update, time for an update. Trump's tariffs facing an impending Supreme Court ruling. And speaking of impending, the government might shut down in the United States. What could possibly go wrong? We've also got, hopefully, friend of the show and Rise Up community member Radio Dan joining us later in the episode. Before, finally, we are excited to kick off part 1 of 4, how to start staking your soul with partner of the show, Jito. Yes, that's right. We are going through a tutorial today. We're going to go over everything you need. Alex is going to drive slowly like a Sunday morning, easy like a Sunday morning through Jito with you. We'll get you everything you need. It'll be recorded later so that even if you're nervous about DeFi, you can dive right in. Alex, Will, did I get it all? And how are you guys this morning?
Oh, I'm just swell. And I would just like to point out that and someone mentioned it in the comments, and then I started looking, and I was like, damn, you're kind of right. Alex is looking extra gingery today. Extra gingerish. It's particularly in the TikTok. On the main screen, more of a brown. On the TikTok, more of a ginger.
Particularly on the talk.
Particularly Garfield-esque.
I would agree.
Being super fat. There. Do you like lasagna? I mean, who doesn't?
Yeah, we need to fatten him up for the Garfield costume, but he does have a lovely auburn hue.
Yeah. Yeah.
Alex, how do you feel about it?
I mean, maybe enough time in crypto, your soul is just taken from your body, and then you just become more gingery.
No, Alex came that way. That was standard issue.
True. That was standard issue, yeah.
Yeah, Alex, any comment?
No comment.
Switching teams?
Yeah. Okay.
I don't know.
But either way, my morning is great.
Yeah, your computer's back.
My computer's back. It's fixed. I had to do the scary thing, which to me, just because I'd never done it before. Usually, if I had a computer being a problem, I've had to do it one other time before. You take the RAMs out, you plug it back in. It just works. This one didn't. And I was like, that's all of my experience with fixing desktops. So I had to reset the motherboard. You pop the bad boy open. There's a little quarter thing that you remove. And you let it sit for 10 minutes, resets the motherboard, put the quarter thing back in. I know it's like, I had to reset the motherboard. And all I did was like lift up a quarter, put it back in. And I was like, aha!
Sounds intense.
Sounds intense. And then bada boom, bada bing, we worked. So
I would have been so worried that I broke something, honestly. So I am amazed.
Well, I was real careful doing everything. And then I cut my fingernails and I couldn't get the quarter out. And so I had to ask Violet, my girlfriend, to come. And she just like walks in. She's like snapping a Slim Jim. She's like, what you need? And I'm like, oh, those hands are dirty. And she's like, get out of the way. And she's like, bam, 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 bam. And I'm just like, ha, ha, ha. And luckily, everything's working.
It's delicate, please.
Don't touch
that. I've worked my whole life on this. Okay, well,
it's all good things.
I like it. I'm glad to hear it. If you're tuning in like Jeff out there, I see Jeff, I see Jason, I see Doug. What's going on? Lots of friends of the show. Or if you're listening in the future, maybe in podcast land, hello, we hope your candles are green. Then let us know if you've got a crypto question as we roll through the news. And of course, don't forget, join us over at community.rumshq.com where the show lives 24/7. Will, what's got you cheesing over there?
I prefer to view where Alex's gorgeous auburn mane doesn't distract from my learning.
Wow. Shakespeare in the comments?
No, Moses with glasses.
I'm not
with glasses. We'll take it, Excellent.
Beautiful.
Thank you. Let us know how you feel about it. And hey, on the way to the news, I want to have you update us, whatever you need to for that. On the way over there, I wanted to let people know, if you haven't seen it yet, we are starting to finally really get our poop in a group. Special shout out thanks to Tori, who has been a big part of it. We have got this beautiful weekly calendar that I hope to share with you wherever you are. Whenever you listen, it's on X, it's on Facebook, it's on LinkedIn. I'm posting it everywhere, and it's going to have a little looky-loo so you can prep for the show each week. And we're going to do monthly calendars too, so you can see when we're taking a vacation, when we're working. Oh, and the other quick screen share I want to show you is hopefully that means we can make more fun art for our friends. Tonight on Rise Up After Dark, we are thrilled to welcome back the most returning guest to the show. Of course, I'm talking about Mr. or should I say DJ William Quigley. So if you
should say DJ.
If
Should
you
say DJ.
If you like to hear from the co-founder of Tether and Wax, who is also possibly a secret DJ, then you got to join us tonight on After Dark. He's going to be there. We're excited to welcome him back. And
Dude, this poster is so good.
Isn't it so good? I got to zoom in on this. It started off, I have to tell you, so this is obviously AI, and I feel like it did me the dirtiest, but you guys, like, it kind of got you.
I think
it crushed it.
And it definitely got DJ Quigs.
Oh, yeah.
William Quigley, maybe one of the smartest folks we've ever had the pleasure of conversing with, who just in the Miami sunset is spinning tracks right here. So we can't wait to have you back for that, William, and of course all of you. Now, speaking of Williams, Will, can you tell us what's going on with Bitcoin? Because people are feeling like we're in this consolidation pattern. I've seen no less than 3 questions asking, are we in a bull run or a bear run? And there's lots of waiting, but this sounds like it might be some substantive, or might have been some substantive news. What'd you text us last night?
Yeah, so Morgan Stanley was the biggest crypto-specific bearish event that was on our radar screen on January 15th. And what that exact event was a vote to kick Microstrategy out of their indexes. Microstrategy, famous for buying a bunch of Bitcoin with Michael Saylor, has about $70 billion worth of the stuff, of the Satoshis. And if they got kicked out of the indexes, it would have cost $3 billion to $9 billion worth of immediate sales on their stock. And it would have been MicroStrategy, but it also would have been all digital asset treasury companies. A digital asset treasury company is a company that holds more, or at least in the instance of Morgan Stanley, we're looking at companies that if they held more than 50% of their entire balance sheet in Bitcoin, would also be kicked out. And there'd be a lot of selling of their stock too, and then a lot of fears that these companies would have to start selling some of their Bitcoin because of how poorly their company is doing. Right? So that was going to happen on January 15th. But yesterday, Morgan Stanley released the news first that they had filed for Bitcoin and Solana ETFs. And then a number of hours later, announced that they will not be holding the vote on January 15th to kick out digital asset treasury companies. And that immediately resulted in about a 3% swing. Bitcoin was breaking resistance and immediately shot upwards. Gave us a little bit of a bullish print. However, today, that has kind of become like a sell the news kind of event, it seems to be, as we're back to having a little bit of a cool off. So that is the event that happened. To the question of, are we in a bull market or bear market? Just because, for me, just because an event happens without confirmation on the chart does not mean you are in a bull market. It's a really good thing. It's a really good thing. Right, because a very bearish, very crypto-specific event is just gone, off the table. Don't have to worry about that. That's great. We do have some things to worry about, though, that are not crypto-specific. This Friday, we have the Supreme Court potentially making a decision. It's an opinion day where they are releasing written opinions on active things that they have already heard from, and it is deemed to be likely that the Supreme Court will release an opinion on whether or not Trump's tariffs are legal or not. To be clear, the Supreme Court is only making a ruling on the wide sweeping tariffs and not the ones specific on aluminum or aluminium, depending on what side of the pond you're on, as well as steel. Also, aluminium is just fun to say, right? I feel like as Americans, we should just like adopt that one because aluminium is great and we should say it just like that.
Garage and urinal.
I am not on the garage side.
Not on the garage side.
No, it is not a garage. It is a garage.
But it is a urinal.
I'm not there either. That's a urinal. That's a urinal.
Okay, all right, okay.
That's a urinal. Okay. It's just the spirit is urinal. The spirit is garage. Aluminium is just silly and fun. You can't say without having a smile on your face.
Can you imagine like tuning out of a conversation for a few minutes to like organize a bunch of tabs, and the thing that like brings you back to earth is the spirit of urinal? And,
No.
It's like, wait a second. What
happened here?
I assure you, it's not as jarring as when you hear a British reporter say, "A bomb was strapped to his back at the urinal," and you go, "What?"
I'm sorry.
This is Nick Norwich. You're listening
Anyway.
to NPR News.
We were just talking about the Supreme Court. In the same breath.
Okay, now I see how we got to urinals. I understand.
And the other macro event as well, that is, again, not crypto specific, is at the end of January 30th, the US government could shut down again. Hooray. So, we have a couple things that could still...
Had so much fun last time that we were like, you know what?
Let's do it again.
Run it again.
Yeah, run it again. So, there are a couple macro events, and also I'll end this, is just because we got one really good thing to happen for Bitcoin, I am a chart guy. I look for confirmation on the chart, right? Events are great, but people who are in the know are actively trading the market before those events are published. So oftentimes you can see things happening on the chart before they're released. Which, hey, we had a bull run heading up into this Morgan Stanley decision. So it seems like some folks knew. And I do not see confirmation on the chart just yet of a bottom just yet. So we are not out of the woods, but this is good news.
So I am with you there, not in the sense that I am a chart guy, though I am interested in waiting for more conviction. I don't have conviction either way, and it feels like as a result of that, I think we're going a little lower. I feel like there's too much uncertainty about too many important things, even as like very bullish things continue to happen across the board. We are, correct me if I'm wrong, seeing inflows for BTC right now. Yeah, and ETH too.
I actually haven't looked at the ETFs too closely over the past few days, so I don't know. All I know is that a lot of people are talking about the XRP ETF.
Well, then you give me a pass. I'm going to give us an update on XRP, and maybe you can touch on the BTC and ETH ETFs with your eyes, and we'll back and forth it a little. Speaking of XRP and ETFs, whoa, the ETF inflows are significant. We touched on this a couple weeks ago, but I feel like we are always, kind of downing on misinformation around XRP. People think we hate it or something. We don't. Alex often says nobody deserves a bump more than the XRP army, and they certainly have gotten a bit of price action, though not as much as I thought we would see. With the number is 1.4 billion, depending on who you ask, in ETF flows. That still represents a relatively small share of the total XRP supply, but I would say a significant. That's almost 1% if you're measuring by market cap. And if you're looking at the total crypto ETF market, I think it gets even more impressive. XRP's big, and the inflows have been big, but the price action has been pretty muted so far. The other thing that's going on for XRP that I wanted to just give some context to, a lot of people are talking about this charter. Ripple Labs has applied for and received conditional approval from the U.S. Office of the Comptroller for a national trust bank charter. And this is exactly what several other companies pursued and were awarded, like Circle, like Paxos, like BitGo, like Fidelity. And so it's really just a big time to be a neobank. And speaking of neobanks, DJ William Quigley said something to this effect the last time he was on the show. He said, with the passage of the Genius Act, the one thing that's for certain is anybody who's touching a lot of money is going to want as much agency and autonomy over it as possible, whether that's issuing their own stable coins, tokenizing their deposits, or trying to play the banking game. There are, of course, lots of different obstacles before Ripple or anyone else becomes some sort of full-service commercial bank like JP Morgan or Morgan Stanley, Bank of America, whatever. This is a narrower license, and it's really focused on crypto-adjacent services. Alex, Will, did you want to make any comment on that before I give one last little bit?
I don't know. Like, yes. First of all, I just want to give this disclaimer that I always have to give. I don't hate XRP. There are plenty of cryptos I dislike more.
Correct.
Yeah.
Can we see your list of cryptos I dislike more than XRP? I would love to do a top 10 from Alex. Just file that away in the back of your noggin.
Yeah, I could do that. I mean, it's not hard. I mean, dude, top of the charts, Pulse.
Oh, no.
Hex.
I am a big fan of this.
Oh my God. Awful.
I knew you were gonna say
The worst. No, I don't know. I'm struggling to put into words how I feel about all this. It doesn't surprise me at all that they're absolutely crushing the ETF game. And I think that is both like I have to throw a tiny bit of shade to say why I think that they're crushing it, but then also say that this honestly doesn't matter. Like I'm very aware that the thing I'm about to say doesn't matter. The only thing you can do with XRP is hold it and hope. And there's really nothing wrong with that because that's the case for most crypto. Barely any of it has like any kind of, widespread use, even in our little niche over here. So yeah, it's true that like if I had a bunch of XRP and I was like trying really hard to go put it to work and do stuff with it, my options would be unbelievably limited. But that's never mattered. And I don't think it really does because that's not the point. The point is to be to sit there and be hopeful and excited about the fact that you think you front ran the great financial revolution of our lifetime. And it's only a matter of time. And, we're playing this fun game where is this year going to be the year? And then all of those big dumbass influencers say, yes, definitely. And then it doesn't happen. And they say, well, if only clarity. I think that's currently the calling card for why they didn't get their number by December 31st. So in that sense, given the fact that there's so much interest, more interest in XRP than pretty much any other crypto besides, the big three, not including stablecoins, but, Bitcoin, ETH, Sol. Besides that, I don't think anything has more widespread interest from more people to hold and invest in it than XRP does as a token. So, from an inflow or from an ETF perspective, it makes sense because also I would say that XRP has the highest level of adoption and holdership amongst people who would probably more traditionally purchase ETF products. And so in that sense, none of it surprises me at all. I do think though that, the price action thing is to be expected. Not going to happen. There's a tremendous amount of XRP out there. None of these custodians are market buying any of it from anyone holding it. They are getting it directly from the source because they have billions and billions of it that they can sell to them. It's a business deal. They're all big businesses in the business of making money for themselves. So yeah, I expect to see that continue, to be honest. I don't even really think, I don't know, this is kind of a guess, take it for what it's worth, the words of some guy in a hot pink t-shirt on the internet, but I don't think I'm really expecting to see any kind of like massive outflow from it. I think those things are probably going to hold relatively steady. The fervor of someone holding XRP tends to be stronger than almost anything except Bitcoin. And maybe some of the really diehard ETH maxis, but other than that, it's kind of what I would expect. I think those products will continue to crush.
To your points in the comment, Leif said, is holding a utility or maybe hopium? And
100%.
Our friend,
yeah, I think you could debate, whether or not it should be, but the fact of the matter is that at this point in the market, given how uncommon it is that people, actually, my mom just asked me the other day, she's like, you're always saying that you use all these tokens every day. What the hell are you doing? And we had that conversation. We had that conversation about, what it is that I do every day with Sol. And there's not that many that you can do anything with, or that you can do that much with. And then some of them, they technically have the options, but really, who's doing a shitload of DeFi with SWI? Not a lot. It exists. There's options. There's protocols there, but they're smaller. The TVL is lower. They're not as talked about. But yeah, holding and hoping is absolutely a utility. It's what the industry's built on.
I mean, I get it.
Funny.
It. Go ahead, Will.
Do you know there's someone we know who has actively been using SWI DeFi almost every day? Can you guess?
Is it you?
Is it you?
No, it's Doug.
No shit.
Doug, all right.
Yeah, Doug's been over on Navi protocol,
Okay, all right.
Explore. He was like, yeah, dude, I've been doing a lot of like DeFi, and I was like, oh, dude, where? Like ETH, Solana? He's like, sweet, and I was like,
all this
Why?
time.
I was
Is
like,
it
I don't know.
like crazy? Doug,
I've heard
what
people
gives?
talk about Navi, but
Oh wait, no, it wasn't Doug. I'm sorry. It's a community member. It's Magic.
Magic. Okay,
Yeah, Magic
Magic.
in office hours.
Magic,
Magic's
what
pretty
gives?
If I
slick.
remember correctly.
What are you
yeah,
doing?
It wasn't Doug.
What's going on?
Magic, if I remember correctly.
Magic's pretty slick, man.
I might be mixing up the two. It's one of them. Pick one.
all this using token talks just makes me think of like, is someone you love using?
Oh, here it is. Doug. Doug goes, me? Different Doug? It was Magic.
Sorry, wrong
Different
Doug.
Doug. Different Doug. Magic. Magic's new nickname is Doug.
Tiny tangent to answer a question. Someone asked if I sold Solana. Yes. I posted in Circle a while ago when it was, like at its recent low point, 120 something, that I was buying, and my sell target was 140. We hit 140. I sold a chunk. I sold raw Solana, and I also sold Turbo Sol because I've been using that product as well. So had a crazy swing on the Turbo Sol. That was awesome. That was a really cool little experience. So now I have fully, actually, I could even throw this.
You've done leverage trading.
Yeah.
Yeah, and it's awesome because my dumbass can do it, and that's cool as hell. I'll show this really quick, Evan.
Yeah, go for it. Here, help you out. What are you showing? He said really quick, ladies and gentlemen.
I can show the ETF flows.
Did you just all that? Jafar me?
Yes.
That was
wow.
Great.
Yes, I did. Okay. So this is Turbo, and as you can see, I was averaging in to Turbo here at these different levels. So the first one that I had was over here. So here, I'm showing you all the receipts here. So I didn't make a tremendous amount, but it was still exciting and cool, and the product works, so that was cool. But so these are the prices of purchases, and then because these here were these really cheap, here Sol was 120 and 120 respectively.
Yeah, that's great.
Those two purchases are what I sold here at a relatively significant increase, 60 cents up to 78 cents, and pocketed a quarter Sol for my troubles, and just letting the rest ride. But this is kind of neat. If you scroll out here, the little interface is pretty cool. It shows you exactly where your purchases were. So,
ooh, that's nice.
With a handy dandy little line to conveniently see exactly where you are. This is about the extent of my chart reading. Here, the price was lower.
Look at
here,
you buying
it's higher.
The basic total bottom.
I mean, yeah. Look at see, like I missed this one, which big sad.
No big deal.
But I did catch this one, which relatively close, and then there it is. So see, here's what I'm saying. Take your profits a little bit.
That's healthy.
It doesn't matter. I did effectively nothing except click two buttons a couple days apart, and I made a quarter Sol for my trouble. And now that Sol is Sol that I can swing right back into this if it craters again or whatever. But shout out Turbo for working and being
And to be clear, this is DeFi Carrot.
Yeah, this is on DeFi
Carrot. This is DeFi Carrot. This is the Turbo Sol product on DeFi Carrot. Eat your veggies.
And I'm gonna give you all a little bit of homework. If you want to see something really cool, look at this is not sponsored. Could be, James. Look at DeFi Carrot. They have two specific tokens. There's CRT and there's these Turbo variants. Those are really interesting tokens to learn about because they do not work the way that normal tokens work, the way that you would go be trading stuff on Coinbase or some other a decentralized exchange or something like that. They work completely differently. They're wrapping specific things, and their performance as a token depends on the performance of the thing that they're wrapping. So it's a very cool way that you can get super hands-on with an atypical kind of token, and I just think that's super exciting. This kind of brings into perspective more the idea of tokenizing everything. It's like, okay, people love to talk about that. Here's a way that you can see it happening in real life, watch them iterate, and participate, and it's really cool.
Okay, so let me bring it back then, because I know Will's got some ETF stuff ready to go, and I just want to put a pin on this by saying, what's so funny?
Wall Street says, welcome to the world of technical analysis, referring to my expert chart analysis of here the price was down. Here it went up.
Hey. He's a technical analyst, ladies and gentlemen.
Watch out, Will. I'm coming for your job. New host of Market Watch in the making here.
Damn. Gonna have to take you out.
Okay, so since you mentioned tokenizing everything, since we were talking about this is a segment on XRP separating the hype from the truth. Friend of the show, Deo, shout out Deo, has been talking back and forth in the comments about nobody really uses the XRP ledger. Sure, it's EVM compatible. Sure, they've got this banking charter. Sure, they've got a huge war chest, but nobody's building on top of it. And I do want to say, one particularly prevalent rumor I've seen in the last couple of days is the DTCC rumor. If you see this, there's a ton of press releasing happening right now that the Depository Trust and Clearing Corporation, that was a new to me acronym, they basically are like the backbone of securities settlement. They have gotten some regulatory clearance from the SEC to tokenize some real-world assets, stocks, bond, treasuries on pre-approved blockchains. There are several. This is starting in the second half of 2026. It's a big deal, but there is no concrete evidence that they are picking or choosing the XRP ledger or anybody as like their darling to run these partnerships. They have partnered with different companies, Digital Asset and the Canton Network or whatever. They don't necessarily involve the XRPL specifically. So just watch out for people on the internet who are telling you XRP is going to $750. It's going to $10,000. Deo in the comments said, mark my words, in 5 years it'll crumble. And I would say, you know, a lot of people in the crypto industry tend to share this bearish sentiment. But the ETFs, they're cooking. So, Will, how does the XRP ETF inflow compare to what we're seeing with ETH, what we're seeing with Bitcoin? Are we also winning there, or is XRP the leader?
So here's the Bitcoin ETF going back to December 19th.
Right.
Recently, though, over the past, say, 5 days, on December 30th, we saw $355 million of inflows in one day for Bitcoin. Immediately turned around and went to outflows on December 31st, which honestly would have been the perfect time to buy to ride the current pump up.
He said
and
it.
Then,
Yeah.
Yep.
Said
And
the
then
thing.
the current inflows of 471 million to 697 million. So January 2nd and January 5th, over $1 billion of inflows. And then yesterday, about $250 million of outflows. If we take a look at Ethereum, Ethereum over the past few days, let's see, 4 or 5 days, $67 million of inflows, turned around immediately. Outflows of 72 million, followed by 174.5 to start off the year of inflows, 168 of inflows. And then yesterday also, well, the Bitcoin ETF saw outflows. We saw inflows of 114 million. And then the Solana ETF.
Oh, I forgot about that one.
Solana ETF just has inflows. I mean, the inflows are smallish, but just inflows. Solid, steady, coming through. And, you know, soon we'll have Morgan Stanley's, you know, addition to these ETFs for Solana as well.
You know, I got to be honest. I kind of prefer a world wherein the inflows to the Solana and the Ethereum ETPs are low. I don't like the idea of those companies buying a shitload of it. I want more people buying the real thing and using it.
I see.
I don't give a goddamn. I just want buying and I want number go up. Come on, ETF people.
I'll give you that, but I have to be a curmudgeon about something.
Sorry, I'll stop.
I'm going to put that on the
I thought we
soundboard,
had
though.
at least another 20 seconds before you
I was willing to
came
go,
back
but
to
we
us.
have a lot of things to cover in the remaining time that
we do.
have.
Yeah,
Yes,
okay, that's fair.
I would have kept
I appreciate
going.
your self-awareness.
I would have kept going for quite some time.
Now, actually, you kind of touched on some of these as much as I think we need to. You mentioned the Trump tariff ruling, which is not a ruling, but really is like a stated opinion, right? Maybe Jillian or somebody else who's legally proficient in the comments can give us a quick TLDR on the difference. We talked about the impending government shutdown. And though it's only really relevant for us, we also, I have to say, have the old TikTok switcheroo coming later this month too. The deal for American investors led by Oracle to take control of its operations in the United States so we can avoid a U.S. ban. Please let our fake radio show continue, please.
Although I have to say that poster for the schedule that Tori made is so good that I think that you know, in the way that the Grinch's heart grew like a little tiny bit, I think we became just a tiny bit less fake.
A little bit less fake.
Yeah,
Tori
like
makes us less fake.
on the
little bit more,
fake-o-meter, we're sliding towards legitimate now on that spectrum.
I don't know if I like it.
I have to say there is a Have you guys seen Bullish Babes, Chelsea's show recently?
Yes, I love
Not
it.
recently.
For everybody on TikTok who hasn't seen it, or anybody off TikTok who wonders if crypto is alive and well, one of the best live shows on TikTok right now happens usually every day after ours. Chelsea, the Bullish Babe, at Bullish Babe, goes through charts, answers questions, has a really fun time. You should check it out. Continue, Alex.
No, when you watch that show, she's doing the work of like 3 co-hosts, but like
honestly,
by herself. Like, and there's some back and forth in the comments here between her and Doug about doing TA together, and all I can imagine is the two of them doing like anything with charts at the same time. I think, as she said, it would be ADHD versus ADHD.
Yeah, actually, I think that
the
would
most
be a really
frantic
fun show.
technical analysis on the internet.
It'd be beautiful.
Maybe you and Doug could have her on Market Watch and just go all over the place.
That'd be a good one.
I would
It
watch
would be
that
a
show.
good one, but I would just I'd totally be thrown to the side as just like this
Run
massive,
over?
Yeah, I'd be run over with squiggles and emojis, and I just honestly, I just have to step to the side.
I didn't even think of that.
It would just become Bullish Babe show.
Well, yeah. Dude, I don't, if we haven't figured it out, I don't know like anything about TA. Literally that here it was down and there it was up is the extent of my knowledge. Like I can barely read a chart, but I'm building that simulator mostly for me. I don't think I've ever seen someone put more lines on a chart than she does. There's so many.
What an odd accolade.
Keeping track of all that is truly a superpower. Like
I've seen Doug put some lines on a chart, man.
No, me too. But you gotta like when she really gets going, there's a lot.
Yeah, check out Bullish Babe for sure. And also, she does a great show with Cosmically Bullish in the afternoons. They've been doing that for a minute. It's really fun, helpful. We got a lot of good stuff on TikTok for people who are sleeping on it. I'm sorry, Will, I cut you off, brother.
Oh, no, it's fine. No worries. Keep going.
Commercial. TikTok. That's it. That's what I got.
That's it. Anyway.
Alex,
I'm
going to give you a couple more minutes to prep this tutorial. I want to just let folks know, if you want to participate in this Jito staking tutorial today, if that's what you're here for, because you want to learn how to start staking your SOL on Jito, you're going to need a couple things, okay? The first thing you're going to need is a self-custody wallet. That's any wallet where you sign up with a seed phrase instead of a username and password, 12 or 24 secret words that allow you to be the direct and sole custodian of your cryptocurrency assets. Then you're going to need like, I don't know, $5 or $10 of SOL tokens. Some of them are going to help you establish the account. Every new wallet on the Solana network requires a very small deposit of like 0.001 tokens. And then because gas is cheap, you don't need to move more than a couple bucks back and forth just to see how this works and build the skills to use it. So self-custody wallet, we recommend Phantom or Solflare. And then a couple of bucks of SOL. And you'll need to go to our partner website, Jito.network. That's Jito.network. Alex is going to walk us through this, and we're going to record this. We're going to put it up as a standalone YouTube video so that if you're nervous about DeFi, you've never done staking before, you've never done anything, but you want to start earning passive yield on your crypto, you want to become a safer, more confident user, then this is for you. We're going to do that in a couple of minutes, but we have some questions. Starting with stablecoins. Stablecoins are a hot topic. Everybody wants one. Willie Quiggs is talking about them on the show. He's launching stablecoins, knows what he's talking about. But do we think that they are an investable area of cryptocurrency? The question comes in. How do we invest in stablecoins and stablecoin hype? What would you guys do for somebody who wants exposure to this narrative?
Yes, unmuted myself. Yes, I have many thoughts on this. One of which is you could literally just buy Ethereum, because that is where the overwhelming majority of stablecoin liquidity exists. So if you want to invest in stablecoins, one potential route, I'll go through a couple, is to invest in the infrastructure where most stablecoins live, which is Ethereum. So if you say, hey, stablecoins are going to keep growing, what infrastructure is going to support that the most? It's undoubtedly Ethereum. Also, Polygon's a great choice, even though like it's a layer 2, but it's not, it's its own thing. You could also argue Solana too, if you're looking purely at an infrastructure play. And then maybe you could say Chainlink, but it's really Ethereum. All right, that's one thing. Another thing you could do is you could invest in the stock of a company that issues a stablecoin, like Circle. And I think the stock's pretty beat up. I haven't looked at the stock in a minute. I've actually been meaning to buy it.
It's only beat up if you're comparing it to all-time highs. It blew up like 10x.
But you want it to be beat up. If you're looking to invest, if you're like stablecoins in the future, the price is beat up. That's a great thing. You know, because I have conviction that stablecoins are going to be adopted wildly throughout the financial system. And who's positioned to benefit the most off of that? Circle as a public company. Buy the stock for Circle. You could also, if you want to invest in stablecoins, buy some stablecoins and go and use DeFi to earn interest. You are investing by using and earning interest. You can go and put it on Morpho, go and just keep it on Coinbase and earn some percentage, or go and explore Aave for lending and things. There's a bunch of different options there. Earn interest off of stablecoins. That's how you can invest in it by using, although that is less investing. And that to me would be, your option. If you also believe that Coinbase one day releases their own stablecoin, personally, I don't think so. You could buy Coinbase stock.
They don't need to. They bought Circle.
Yeah.
They're part owners. They have a revenue share agreement. So they own half that company.
Yeah. And that's it. So you could look and keep an eye open for other future companies that are going to release stable coins and stuff. If you think they have a real genuine adoption path, you could invest in their stock too, but nothing is as well positioned as the stock that is Circle. My personal thoughts and opinions. Or buy Ethereum. Or do both.
So couldn't have said it better. I just wanted to give you a quick price on Circle stock if my tab will cooperate with me. $84 is what I'm showing per Yahoo. Whoa, that doesn't seem right. Somebody fact check me. CRCL is the ticker. Oh, maybe I'm talking about some. No, that's it. $84. That's definitely. I would be a buyer at that price. But I also wouldn't be surprised if the market got beat up for it to slip it a little lower. That's down from the all-time high of almost $300.
You got to remember that we do have this little bit of an anvil hanging over our head with regards to stuff like that, because technically, on paper, USDC is not fully compliant with the Genius Act, and we're not enforcing all that yet.
That's interesting.
It's kind of just sitting there. But technically, the only stablecoin, and I really want you to dig deep and ask yourself if you think this is a coincidence. The only stablecoin that is completely compliant with the Genius Act is USD1, which is World Liberty Fi's stablecoin, which launched 1 week after Genius passed. Coincidence?
Coincidence? I think not.
Or corruption.
I've
one of
seen
the two.
Stablecoins, I know them.
One of the two. Yeah. Well, luckily, I still have my World Liberty financial coins, which are technically down, but only by a few $100s now. So hey.
It's kind of like the rule about Bibles in schools. It's got to have the Pledge of Allegiance in it. There's only one? Weird.
Yeah. So hey, I really quickly with Circle, just so this is how public companies work. When a company goes public, everyone in the company, not everybody, but a lot of people in the company own stock, but they can't sell until usually 90 or 180 days, or is it 190 days? 180 days, 190 days? 180 days, I believe.
I believe it's 182.
Yeah. So I have marked on my chart this purple line here, and I'll make it a little bit brighter so folks can see.
Yeah, it's.
This white line is when we reach that 180-day mark. So we are not at the point yet where you have a lot of people that have stock that have been waiting for a very long time to sell it, because they've been in that company for years and years and years acquiring stock. And that is the last opportunity where you'll probably see a really big dump. After that 180-day mark, honestly, probably the time to buy Circle if you're really looking for it. Honestly, right now seems like a real great opportunity too. But after the 180-day mark, you're going to see a lot of selling that opens up, just kind of like an airdrop almost. People get a bunch of tokens, oh my God, money, and then they go and sell it, right? It's the same general thought process. So just keep an eye open for that. I'm going to be certainly keeping some cash on the side to buy some Circle stock as well after that 180-day release.
And what's the date on that one more time?
Let me actually get the official date.
Look at that arrow.
Close. It is February 24th.
February 24th.
It's the
right around the corner.
It is right around the corner, honestly.
It is right around the corner. I had forgotten that was a condition, and I agree with you completely. That's exactly what I would be waiting for. We had a quick follow-up about buying precious metals. This is from our friend Carol, who wants to do it digitally. And I just wanted to say, I think I sent you a message about this, but so you can have it here or anybody else who's curious. If you're interested in buying precious metals on chain, you don't have a lot of options for copper or silver, but you definitely have some options for gold. And the tickers I would be looking at are Paxos G, which I think is PAX. I'm getting a little fact check on myself here. And then from Tether, they have a Tether gold token, which is X. Somebody help me. XAUG, something like that. I think it's got the elemental symbol for gold. But both of these are basically backed by gold. They trade with the price of gold, just like your stable coins trade with the price of $1. They're backed by big time reserves. XAUT, that's what it is. And you can get them on most major crypto exchanges. You can get them on Kraken, you can get them on Coinbase, you can get them on Binance, you can get them from your favorite decentralized exchange. They live on several different networks. It's a great way if you want to turn, say, a stablecoin like USDC into gold or a token that represents and is tied to the price of gold. We're definitely going to get more options for more kinds of tokens. Precious metals, probably copper, probably silver. I saw a really prevalent scam the other day that made it around Twitter. A lot of different places people were posting about it. That Circle had released a coin called SILC, and it was like their tokenized silver coin, but it's an unconfirmed. There is no SILC token. If there is an SILC token, it is not released by Circle. As of yet, it's released by scammers. And Will, I see you have a correction about the Circle date.
Yeah, and let me just make sure I show this on the chart. So, we did not account for weekends. The selling actually already happened. So now is actually a good time to buy because not insiders, but people who worked at the company could sell on December 2nd. And that is marked right here, right after that real big dip afterwards. So it is actually looking pretty solid. If you want to start buying some Circle, honestly, not a bad time to actually start now. In fact, on the weekly chart, stochastic RSI, we were in super oversold territory. Now people who had stocked have sold. I would expect to see the stock be suppressed for a little while as people take some time to sell, right? Which means it's a really good time to consolidate and potentially get some Circle stocks. So that's exciting.
Will, I saw you also wanted to break a little news to us per the backstage chat, and we have a question here from our friend Erica, Perk Insights, who said she received a comment on Not Your Keys, Not Your Crypto regarding Venezuela, saying the U.S. can get the Bitcoin they allegedly hold, but you've got another update for Venezuela too while we wait for clarification about that, yeah?
So CNBC reported this morning that oil sales from Venezuela will continue indefinitely, and sanctions are being reduced for Venezuela. Also, fun fact, since Maduro was captured, the Venezuelan stock market is up over 100%. Because people are just piling in because, I mean, when you take out the dictator who centralized everything and consolidated all of the industry, and then you come in and say billions of dollars of oil infrastructure will be set up,
well,
a lot of money floods into your stock market.
Also, just Venezuelans were deflationary after that whole thing. I mean, like, what was so the figure I saw, which I would have to fact check because I don't know anything about this beyond what I've read briefly, was like 20% or something, or near 20% of the population was like leaving and departing.
Yeah, well, when Maduro consolidated the oil industry and nationalized it, you saw a massive brain drain out of Venezuela. That also started happening when Chavez led, I believe the guy before Maduro. You started to see a massive brain drain out of Venezuela. And something else interesting happened.
I just didn't know it was that high.
Yeah, it's a huge amount. A ton of like very educated people, highly specialists, started leaving Venezuela because they saw the writing on the wall, even before Maduro. And then what happened is Venezuela and Cuba started a much closer relationship, as highly educated people in Cuba started being sent to Venezuela in agreement for Venezuela to then send Cuba more oil. So it was, we have a brain drain, but we have oil. Hey, we have brains, but we don't have oil. Swap. Hey, cool, great. Now that is being disrupted and the United States has control of the oil, that's not going to Cuba anymore. So you're going to see some, now it's like in the Caribbean, a lot of eyes are really focused on Cuba to see what the shakeout of this is going to be, because Cuba is even more isolated than it was before. But that's not what we wanted to talk about here. But it's just something really interesting, because there's a lot of knock-on effects whenever something crazy kind of like this happens. But what I was going to talk about is that, before this report came out from CNBC, 12 hours before, President Trump said that Venezuela sent 30 to 50 million barrels of crude oil to the United States. The oil shipments will be sold at market price for over $2 billion. Large U.S. oil companies will begin substantial investment in Venezuela to allow for much higher crude oil production, which is what we were saying. It makes sense. Flood the market with Venezuelan oil, drive down the price of oil even further, tighten the screws on Russia. The U.S. capturing Maduro will reshape global energy trade, as the U.S. now controls an OPEC country.
Yeah, I thought it was the Bitcoin thing was interesting. I hadn't heard that until I saw Erica's video yesterday. But just for the record, I don't think it matters. We just waltzed in and took the president. I think if someone's holding Bitcoin, it doesn't really matter how it's custodied. We could get that too. Like, I mean, that's the thing. Like, self-custodying, like, none of it's infallible, right? Like, there's always a point. Nothing on earth is 100% secure. And it doesn't matter who has the keys. If you kidnap the person with the keys, you can probably get the keys from them, right? Like, that's kind of the point. That's why, like, the Ledger, private data leak was such a big deal, is such a big deal. The one that just happened, not the first time. Because contact information is leaked, like, up to and potentially including addresses and names and stuff. So, like, there you can have the best encryption in the world. You can have the best security and custody practices in the world. If you kidnap everybody with all the keys and stick them in a room, then, hey, guess what? You can incentivize them to give you those keys. And that's why there is that's why people like our friend, the white whale, remains unknown. I mean, there are plenty of people who conceal their identity because of a concern for their security. So it is interesting to think about, like, nations. It's not interesting. It's more in a morbid way. Like nation states custodying assets like this that you would then have to get by like some nefarious means. Mm-hmm. It's problematic to say.
A wrench
least.
Attack.
Yeah. Give me your Bitcoin. No. Give me your Bitcoin. No. Give me your Bitcoin at your family also. Oh, okay. Okay. Yeah. okay. Let me get my ledger. Shit. Yeah.
Don't matter.
Yeah, and all of this, I want to say, I just did an update on a couple of different news sites here. I haven't found anything other than allegations. The allegation is they were ostracized from global economies, global finance, and so sanctioned, It is likely that they probably had cash reserves, gold reserves, and therefore, why wouldn't they also have Bitcoin reserves? There are some interesting reports from major custodians like Fireblocks, etc., saying, we don't have a, Venezuela KYC wallet, but probably based on what other people have done, they have multiple wallets. They're probably buying things over the counter privately. They may be distributed across top government officials. Who knows? All of it at this point is speculative. And certainly, if it comes to light and we hear about it and it turns out to be a big stash, we'll talk about it on the show. So if you've got more questions about that, let us know. I also see a really good Venezuela story here about Polymarket that I was thinking about making a video about. Somebody made a big bet that we would capture Maduro like right before it happened and won a ton of money. So more on that later. We'd love to hear your thoughts. But Alex, I think it's about that time that we pivot over. Are you ready to do a quick tutorial, or do you need me to give you one more second and have a little
stall? One more.
Hello, my honey. Hello, my darling. I like to sing about the moon and the June and the springer. I like to sing about the sky so blue.
Okay, great. Perfect.
Okay.
Ladies and gentlemen, Mr. William Watson, thank you very much.
Okay, so before I throw the screen share up, I just wanted the tiny preamble here. Is that really, truly, all you need to do any of this is a hot wallet, a software wallet, a wallet that you can easily connect to all of these different DeFi protocols. This honestly doesn't just apply to Solana, by way of Jito, like we're about to talk about, but anything in general. Get a wallet, put some crypto in it, do stuff with the crypto. That's like the 30,000 foot view sequence of events that we're going to do. The whole thing can be boiled down to that step. So bear with me if you don't have a wallet yet or you haven't funded it yet. This is still applicable. You can come back to it later and we can do more. I just don't want to go, like full into the weeds on getting your first wallet and all that sort of stuff now. We can do that later. And if you need help with that, then find us in Circle at community.rumshq.com. There we go. Thank you, Evan. I'm going to throw up the very first screen share here, which is just the Jito homepage, and we're going to start there.
For people playing along at home, you'll want to go to Jito, JITO.network.
Thank you. All right. I have set up a separate, just like little social wallet just to do this with so that we can start completely from scratch. So on the homepage here, obviously we have a bunch of stuff. The number one thing that we're here for is staking. This is a liquid staking service provider, meaning that in addition to you submitting SOL to be staked, you are going to receive another token in exchange for your SOL that you're staking. And in order to unstake that SOL, you would turn back in that liquid staking token. It's a receipt token that you can go off and do things with. So interestingly, the stake is not tied to the account. It's tied to the token. So if for whatever reason you need to unstake from a different account or something happens with one wallet and whatever, and you move your Jito SOL in this case to another wallet, that's fine. For this one, for Jito in particular, you do not need a VPN to stake, but of course you can use one if you'd like. Totally up to you. We're going to cover one or two places that are VPN required if you're in the United States, and I don't know exactly what the rules are for every country around the world, but you could look that up pretty easily for yourself depending on where you are. So moving on, the very first thing that we're going to do here is just hit stake now. And Evan, the one thing I was going to ask you, just because I'm not on the StreamYard page, is if I indicate to you verbally that I've clicked to a new screen and it doesn't show, if it's like a weird pop-up or something,
I will let you know.
Give me a quick little thank you.
Now, I do want to interrupt you just to ask, shouldn't the very first thing we do be to connect our wallet? And could you just preview it for the people who may have never done it before? I see you're already connected here, but this button would not say a wallet address as it appears now. It would say...
that's correct. I did say that I was starting with a wallet done and connected and funded, but...
I just want to let the people know.
Okay, so this would... Here. It would look like...
He went all the way back for us.
It would look like this. You would just hit connect. It's going to detect all of these different options, and then I'm going to select my Solflare account here. Not sponsored by a Solflare. Okay, so anyway, moving on. We'll hit the stake now, and that's going to bring us to this little interface where we are going to exchange our SOL for Jito SOL. And as you can see here, I have half a SOL in here. So we're going to just stake a quarter of it because I want to keep some.
Is there a limit to the amount you can stake, minimum or maximum?
Maximum, I don't know. That's too rich for my blood. Not that I've ever encountered. And minimum also technically no, but I wouldn't probably do less than, you're gonna pay a fee when you do this, right? So you kind of have to weigh the pros and cons of the amount that you're staking, and whether or not it's really worth it to do stuff.
Sure.
I kind of generally operate with a 1 SOL minimum when I do stuff to experiment, but I mean half of one, a quarter of one, a tenth of one. It's kind of whatever floats your boat. If you were like doing this for the very first time and you wanted to get the process down, start with 0.1. Doesn't matter. Okay. And then you have a couple options here, which I actually submitted a question just to see if there's a specific reason you would want to go one side or the other. As far as the exchange rate goes between SOL and Jito SOL, I've not found too much of a difference between, you can see here it's very, very minor, if anything, to purchase Jito SOL like off of the open market via Jupiter, or to directly mint it from Jito via their staking pool contract. Just given that I am trying to, keep things on platform here, I just elected to direct mint, but I don't really think that it matters. The end result is the same. Yes.
I just wonder if you could dwell a little more on JitoSol too. We've talked about it in other episodes, but since this is the first time, maybe if people have staked their ETH before, they didn't get a token back, and they may wonder, why is Sol being traded for this token that's worth like a different price? Please tell us more.
Yeah, so good question. There's a difference between native staking and liquid staking. When you're natively staking, you are contributing the crypto being staked to the blockchain via staking contract, and that's it. And then you would use that same contract to unstake the crypto that you staked, and off you go on your merry way. There's been an evolution recently, I don't remember exactly when liquid staking started, wherein instead of just simply native staking, you can what's called liquid stake, meaning that in addition to executing that stake, you're also minting, in this case, a new token, in this case called JitoSol. There are a lot of liquid staking protocols around the world. The biggest one on Earth is Lido for Ethereum. Staking there gets you ST ETH in return. And really the point there is that it just allows you to retain some sort of usability and access to the money that you have staked while your Sol is working to secure the Solana blockchain. You can do stuff with the liquid staking token to increase your yield or trade it. Matt Wiley in the circle a while ago asked, could you theoretically stake and then swing trade the JitoSol? And absolutely, with one important caveat that as you go off into the wonderful world of DeFi and do things with your liquid staking token, if you lose it, you also lose your ability to reclaim the crypto that you staked, because this receipt token, the JitoSol here, is what you need to get the stake back. So if I'm off and I'm swing trading to get more JitoSol, because that would allow me to unstake more Sol, trade it in for more Sol than I originally staked, which you could do, I could also mess that up. And I could lose I could make a bad trade and I could lose it, you know? And in that case, I would not be able to unstake. So liquid staking would be the rabbit hole you could fall down with specifics. There are good ones, there are bad ones. I like to stick to the ones that have enough TVL, total value locked, and volume and adoption and users and all that kind of stuff to make me feel a little bit more confident, because every single step that we take here adds a little bit to the amount of risk that we're taking with our assets.
And Alex, can you explain the price discrepancy maybe through the lens of this question? Solom asked, is this a derivative of Sol? And I said, not exactly, because it represents Sol plus something else.
Yeah. So what you're getting here is a token that represents more than just the Sol. And the way that you earn the rewards is through the increase in value of JitoSol, because it represents the growing stake. So there is a price difference, and you will notice that changes. They are not always an exact match, and they are not a one-to-one match. And different protocols handle all of this differently. So there's a tremendous amount of documentation that you can dig through about all of the specifics. And I would say, honestly, that's another interesting little homework assignment, kind of in the same way that looking up something like CRT or Turbo on DeFi Carrot, like we recently talked about. They're just different ways that tokens can exist and behave, and they represent different things, and they wrap certain stuff, and whole lot. It's a wonderful, gigantic world of things you can tokenize. Okay, so all we're going to do here, I'm just going to leave it on direct mint. We're going to hit convert, and this is going to pop me out to my wallet. I'm going to approve that transaction, and then there we go. So can we see the pop-up here that just came up? Yep.
Congrats on your new JitoSol. Ooh.
Yay.
Got that new Sol smell.
So what I think is kind of neat is that in addition to giving me the warm and fuzzies by sending me a congratulatory message here, I can directly go to DeFi opportunities, or I can elect not to. Now, one important note, you could stop here and you're going to be earning whatever the APY is. I think it's 5.89% right now. 5.98% right here. You can.
And Alex, APY is annual percentage yield, so that's what I'll earn every year?
Yes.
Thank you.
Correct.
So what we're going to do, though, is not stop here, and we're going to continue. And now, to be very honest, and I kind of wanted to stress this just because it's kind of funny when you, strip away all of the extra stuff and all of the specific skills that we need to get to this point. We're done right now. is how
That's
easy
it?
it is to use Jito. That's
Amazing.
it. Connect. There's a big purple button that says stake now, and you go over there and you pick direct mint or swap via Jupiter, and you hit go and convert, and there you go. They give you Jito Sol. And like I said, you could stop right there. Or you could continue. So we're going to continue because why would I stop?
Dang,
So
you're doing
I'm
it
gonna-
all in 1 week? Woo! Look at you.
So I'm gonna elect to go to the DeFi hub. And now what you can do here too is if you were just going to Jito, this is just also here in the top menu bar. I wish I could draw on the StreamYard screen the way I can in a Google Meet. Wouldn't that be cool?
Yeah, I wish you could too. I'd like a smiley face for the vibes.
But at any rate, we're just going to go right over here to DeFi. And now this is where things start to get immediately confusing and overwhelming. So a couple things that I do have to shout out because they're cool. I think they could be a little bit more pronounced and a little bit bigger and include more stuff. But this is a great start. I like to see it here. Right here, there is a dictionary and a safety guide. So you can spend some time clicking in through here. Again, I wish that it was more, like it's pretty small, but there is at least something there. And then there's a few different jargon terms that you can look up. Again, could be more, but we'll get into that later. At any rate, now there's a couple things to know right off the bat. So if we look at everything, they have listed here 43 different strategies that you can use to compound the amount of interest that you're earning in different ways. All of these carry their own risk profiles. These are not all the same. Sometimes, as you can see here, we're talking about a borrow and lend strategy using the protocol Drift, or we could be talking here about providing liquidity on Camino, a different protocol. Here's a looping strategy wherein we can restake the Jito Sol on Camino. So there's a whole bunch of different things. Or excuse me, here's the restaking one. This is a looping strategy on Camino. There's nothing to say necessarily that any one of these is inherently better than the other. You'll notice that there are varying interest rates. There are different risks associated with all of this stuff. I see Rod asking about the specific risks with staking or with providing liquidity or any of this kind of stuff. Without lingering on it too much, what I'll say is that the risks with staking would include malicious behavior by the validator that you're delegating to. That was a lot of jargon. Basically, when you stake, you commit your crypto, delegate your crypto to someone who is working on the network, a validator. Validators, as the name implies, are responsible for the validation of transactions to make the blockchain. And when you commit resources to them, it makes their job easier. They can, however, act up. And if they do, the network will punish them by a process referred to as slashing. And if you are someone who has delegated to a validator that gets slashed, it is possible to lose money. Evan, have you ever actually encountered like an instance wherein you or a notable slash occurred? Because I've actually never seen it happen.
No, I've also never seen it happen. I've certainly never experienced it in a pool where I was reallocating my assets.
It's worth knowing because it is a thing and it's possible, and it's a slashing is a term to learn, just like validator, just like delegator. But like I said, I've never encountered it in the wild actually. So on the risk totem pole, I would put getting slashed while staking relatively low. Possible, no risk is ever zero, but it's not something that I lose sleep over. And then moving on, there's, like I said, there's providing liquidity, right? I mean, Evan, I don't really want to spend too much time there. You've done still to this day what I would call, one of the better videos that I've seen about liquidity providing. There's risks associated there, like, the price of the asset that you're providing liquidity with falls out of the range at which you're providing that liquidity. You can suffer impermanent loss there if the price does not return to that region, or you get out before then. You can make that loss permanent. All of these things, you can spend some time with like your LLM, your GT, your Claude, your whatever, talking about the specific risk profiles of strategy XYZ. And that's probably what I would do personally, just because there are so many.
I want to clarify a couple of different things that you said here about slashing first. Solom asks, so they punish the customer when the validator acts wrong? And I want to highlight this comment from Bearded, who gave us the fact check. Thank you, Chief Fact Check officer.
Sweet.
Solana validators have not experienced any slashing events to date, as the network lacks a fully implemented on-chain programmatic slashing mechanism. And different networks handle slashing penalties and fees different ways. If the service misbehaves, that's the risk you take, is that they are temporarily reassigned the right to your tokens. And so it's important to make sure, just like you would with a bank, that you are trusting somebody who is trustworthy. How could you do that? You would look at their past performance. Most websites where you can stake crypto tokens, like Anchor, like Lido, they will show a number of statistics about a particular validator. They'll say, for example, the average runtime in the last week or month or year. This is like, have they ever turned their machine off and not been responsive to the network? Have they ever been slashed in the past? They'll tell you how much of the rewards they share with people who stake with them versus how much they keep to themselves. There are all kinds of stats that can help you determine this stuff, and that's a good question to ask where I would encourage you to go deeper. Alex, it sounded like you were looking something up over there.
I was just answering a question on YouTube here.
Got it. Do you want to share it with the class, or can I make another point about something you said earlier?
Go ahead.
Looping versus restaking. These are words that Alex used earlier and acknowledged were jargon, and I just want to define them for you. You'll hear them a lot in DeFi, and it's basically a way to compound your risk, to put more assets back to work in the same place or a different place to earn more yield. But specifically, restaking is using the same collateral, like that same initial asset that's already staked, to secure or lend or loan in a different protocol. So you take your ETH, or in this case, your SOL, you stake it or liquid stake it, and then that stake, the JSOL token or whatever you get, is then reused to provide economic security to another system. This increases your risk for slashing, because now not only are you trusting one source or site, you're trusting a second source or site. Even if it's on the same website, you're trusting perhaps a different pool. So you're compounding the risk you take on. I think in most cases with something like this, with a major asset, it's pretty minimal. Mm-hmm. And then looping is when you increase your leverage by borrowing more. Okay, so if, for example, I deposit my SOL, and then I take the JSOL and put it up somewhere as collateral to borrow more, or I'm able to, on some platforms, you can use what's deposited as collateral to borrow more, and then amplify your leverage by using the money you borrowed to invest and earn yield on that. Maybe I deposited $1, I'm earning 5%. And then I borrowed 50 cents because they let me take out that much against my dollar, and I could reinvest that 50 cents. So I'm earning yield on my dollar plus the 50 borrowed cents. So even though it may be the same interest rate, 5% or whatever, because I'm lending more or staking more, making more money. That's called looping. And some people will do that over and over and over. They'll lend and borrow and lend and borrow and lend and borrow and lend and borrow all day long. And there are even DeFi protocols like our friend Jeff the Dunker is building at Odyssey that will allow you to, instead of having to click that button like Alex showed you and then click another button to get a loan and then click another button, and do this time-intensive process to wind or unwind it, they will bundle this in like one button so that you can click a little slider to adjust your risk. How much do you want to do? You want to loop it 1 time, 2 times, 5 times, and then you can click a button and they'll do it all for you. You'll sign 1 time with your wallet, and then bingo bango, you're done. And if you want to undo it, you sign 1 time with your wallet and you're done. That's the future we're going to. It used to be way more painful, right, guys?
Mm-hmm. Couple quick rapid fire questions to answer before I continue. Rada asked about the preference between Turbo Sol or Jito Sol, and I just wanted to clarify that these are 2 extremely different assets.
Yes.
Turbo Sol is a wrapped, leveraged long position on Solana.
So it's like looping.
Yes. But very streamlined and contained into one thing, wherein the management of the position, the responsibility for that management goes to the protocol. You can opt into a more hands-off approach with different kinds of tokens to be honest, this is the coolest way that this stuff can work, in my opinion. Like Evan said, you can either use a completely raw protocol where you're completely in charge of all of it. You can trade leverage with a whole number of different protocols. Or if you, like me, don't want to mess with that, don't want to take the time to sit there and try to manage the ranges on these things and protect yourself from liquidation, all that kind of stuff. Very recently, the product Turbo came onto the market, and you can do that with that and have them worry about that. You're choosing to trust that protocol, but you are also making yourself a lot more hands-off. And I think that's a good thing to be able to opt into if you want. The Jito Sol is a liquid-based reward accruing staking token. It's a receipt token. You stake your Sol, you get the Jito Sol in return. You can go off and do things with it. You can swing trade it, you can sell it, you can buy more of it on the open market, you can restake it, you can loop it, you can leverage trade it, you can provide liquidity with it. All these different things can happen with it. As all of that happens, transactions on the Solana network validated by Jito are happening. And there are fees that are accrued by Jito for all of that stuff happening. Those fees, in part, flow into Jito Sol, and the revenue from all of that makes Jito Sol worth more. And that is how you earn staking rewards through that. Not by physically earning more tokens like you would if you were natively staking and they pay you out in rewards every week or 2 weeks or whatever it is, but by the value of Jito Sol actually increasing compared to Solana, so much so that when you go to unstake, your Jito Sol that you got will unlock more Sol for you because it is now worth more comparatively. Great question. Solemn asked if you can choose your validator. Sometimes. Yes.
That's exactly where I was going to go. I love this question.
So again, just like with the way that you can become more hands-off by using Turbo Sol to manage a leveraged long position instead of managing your own leverage trade, some protocols will select the highest reputation, most reliable validator for you. And sometimes you will scroll through a big list of validators and pick the one that you want to delegate to. On Polygon staking, for example, you can go directly to Polygon's staking terminal and they give you a whole list of all of the validators with a score, an amount that they're currently managing and have been delegated to their pool. And then you can go from there and look up that particular validator and get their full track record, their history, if they've ever misbehaved before, what their reputation is, how long they've been operating, and pick manually there. And there are ways that you can do that for every blockchain, but there are also protocols that take away some of that process and headache for you, and just you can tell them, like, look, I trust you as the protocol to make the best choice because they want to protect their reputation. They're going to pick the longest standing, best rates, because not every okay, we're going to get down another rabbit hole here. Put a pin in this for later. Not every validator that you can delegate to will pay you the same reward. Some of them have different fee structures. Some of them have more assets like under management kind of, and the rewards that they pay out might be more or less depending on. That's a whole other thing, can of worms that I don't want to open right now.
Well, can I actually give you some Jito stats on their particular validators?
Yes, please
So
do.
Anybody who is a validator for Sol can choose to run the Jito Sol validator set, but to actually be in their set, like the validators that Jito's stake pool sends Sol to, they have to meet a set of criteria. They have to first, of course, run a particular Jito client. This is something called MEV enabled. You're going to have to file that away and remember that for later. We'll get into it in one of our future weeks. They also have to keep their validator commission at less than 5% and their MEV commission less than 10%. They can't be in a validator super minority, which means like the top 33% stake. You can't be like a conglomerate, basically. They have to have certain standards for performance and uptime, which means, at least as of the last update, that they are voting. That's what a validator does. They vote on the transactions coming in consensus on at least 97% or more of expected slots. So they have to be on and doing the work of validating transactions 97% of the time. They can't be running any kinds of modifications, no jailbroken validator kind of thing. And then they have to also meet requirements for a minimum amount, like a minimum stake, and voting history requirements. They can't just be like, hey, brand new validator, nice to see you guys, I'm going to participate. No. So Jito does some vetting for you. They score these people, they rank them, and then the top set, about 400 slots, are selected for allocation from the Jito Soul pool. And they do all this on the back end so that you just have to click this button. You don't really get to choose within this pool, I'm delegating to this person. No. They say, hey, here's 400 of these validators who meet our criteria, and you stake with us to earn rewards from them. All that stuff is in their documents, by the way, on Jito.network, but that's the TLDR there for you. Pretty cool.
Shout out to Exitvello, asked a really cool question that I've never considered. Could you use a liquid staking token like Jito Soul to participate in Turbo? The answer is no, not right now. But I did just text James, who is the DeFi Carrot CEO, and ask him if that is something that could theoretically be done, why or why not. So he's usually pretty fast at getting back to me. So if he answers before the end of the show, I'll let you know what he says. Okay.
Got him on speed dial.
Dude, you have to. See, that's the thing. If I encounter a protocol that I really like, and the first thing I want to do is like, okay, I got to meet someone who works here so that I can bother them. And James is very botherable. He's a good dude.
Yeah, he's very botherable.
I just imagine Alex outside of the window on a rainy day, and there's like some CEO of some new DeFi platform just like snug in bed, and all of a sudden they just wake up to like a, and it's just Alex just outside their bedroom window like dink, dink.
Hey, hello, someone has a question.
Hello. Just like,
not ideal.
And then behind you is Joe showing up their conference booth. How are you serving people like me? And they're like,
they wake up in a cold sweat. Yeah.
They wake up in a cold sweat.
Some people ask me, what are your goals in crypto? My number one goal is to know everybody.
Mm-hmm.
Okay.
Everybody.
I would like to do a brief overview of some of the strategies that I've personally used, taking Jito Soul off.
Let me ask you this, Alex. Since
Yes.
we're almost at the end of the show, maybe we could save that for a future week because I'd like to leave a little gas in the tank. Yeah?
Here's the thing. I can do it in less than 2 minutes, and you can
Okay,
time
then
me.
what am I going to do next week? And the week after that? And the week
Go into
after
way
that
more
to tell
detail.
people
Do you
to
know
keep
how many rabbit holes we opened? How many cans of worms I
What if-
cracked the lid on and then put back on the shelf?
Yes, that's called teasing the people, Alex. Let me ask you this. What if we talked through maybe how to withdraw? We have the question again from friend Rada who talks about whether or not they can withdraw instantly. Like, I would love to close the loop. We're done staking and then leave something in the back.
All right, you're lucky today, Evan. That's a great question, Rada. We can do that one, and let the record show that Evan is collectively rugging all of us.
This is
Evan,
a gross misrepresentation of the
that's
facts.
very part 2 of you.
It is very part 2 of me.
Think of
Thank
that
you very much.
TikTok meme. To hell with you and your part 2. But okay. All right. So is there a specific time period for staking with Jito Soul? No, there's not, and that's awesome. So check this out. So you recall, this is all happening here in real time. If you're in podcast land, hello. I'm gonna go on stake right now and show you guys. So let me throw this back up here.
Hold tight.
All right. So here's our dashboard. I'm gonna go right back to the stake now, and if you just go to stake now and you scroll down a little bit, so up top, you can contribute more. Show you the conversion rate here right now. Oh, I forgot to mention, if you see this, you can add a little bit of customization to the initial transaction that swaps your soul for Jito Soul. And this is kind of it. If you keep priority fee on, which I do because I like to support small business and companies that I want to see survive, this pays a tiny bit more gas to give your transaction priority in the pile. But you can turn that off if you want. The downside there is that it might take a second longer to happen, or maybe it's a little more likely the transaction could fail or whatever. But you can turn that off. It doesn't hurt you in any way. And then tips active, you can route tips to the people who are validating on the network and making all of this happen. I keep it on so that I'm at least contributing a little bit of something, and I'm talking fractions of a cent here when you're this low. This is not like a number of dollars that you're paying in a fee here. And then the slippage thing here is just setting the slippage if instead of directly minting the Jito Sol from Jito here, you are swapping on the open market via Jupiter. You can adjust slippage right there.
And the slippage percentages, they're quite low. I would consider them. You probably should be able to do 0.1%. I would imagine.
Yeah.
And get it to go through most of the time.
Yeah, and here's another tin of worms that we're gonna lightly vent and not explore right this second. Slippage on a swap like Sol to Jito Sol can and should be much lower than the slippage on a token that is hyper volatile, because Jito Sol increases in value at a very predictable amount, so there's almost no volatility in the value equivalent Solana to Jito Sol. It's a very predictable swap, meaning that your slippage should be much lower. And if you're unsure or unaware, slippage is the term that describes how much the price of the asset you're swapping for is allowed to change before it will cancel your transaction and give you the opportunity to reapprove. So if we have it set at 0.1% here, we are okay with the Sol to Jito Sol price valuation changing by 0.1% before the protocol is going to be like, let's let the user decide whether or not they want to continue because the price has changed more than their allowed slippage amount. Honestly, that was pretty much all the slippage. We don't need to, that can of worms is done.
No,
Okay.
but let me just add one thing about this slippage and the fees.
Damn it.
You're going to pay these fees when you're converting, like from Sol to Jito Sol, and when you're swapping back. You pay a fee on pretty much any transaction that happens on chain. This is the convenience fee. It's not usually like a extraction fee, though you are paying some people for the business of like the energy they provide, the service they provide. It's way better. One of the reasons we're getting into DeFi is because these fees are way lower, way better than the rates, the fees, often invisible, that you're charged by your bank, by your broker. Slippage sounds like it sucks, but would you rather have a little bit of slippage, like 0.1%, or would you rather somebody says, hey, the price today is $1, and what if the actual market price of the asset goes down to 50 cents and you're stuck paying $1 because it's centralized, it's not on all the time? Like, that's what we are trading to get this. Mm-hmm. So, we have a better story to tell, but this is a good thing, I would say. Wouldn't you agree?
Yes, definitely. All right, so obviously, this is a relatively small balance. I haven't really done anything with this yet. It's been 20 minutes. Unstake. I'm going to click use the max. Here, you have two options. Immediately via Jupiter, which is basically just facilitating a swap, and they send me a warning here that it's 0.06% below fair value. Or you can delay it by 1 day. And the reason that I'm saying, there is a minimum that it makes sense for, although it's quite low, you're going to pay a 0.1% fee on the unstake, which is just one of the ways that Jito as a protocol makes money. So either way, pick your thing. I'm just going to go instantly for the sake of demonstration. It pops up a transaction to approve in the wallet. I hit yes, it's done.
So just to make up for that fee at a rate of 5.9%, you'd have to. Oh man, you'd probably have to keep it in for just a couple of weeks. Basically.
Yeah, yes. In short, like, I only did this to demonstrate the use and the process itself. I would never, in my personal DeFi practices, stake and unstake immediately. There is no point doing that. You will lose money if you do it that way. Yeah. Not a ton, but to the fee. You haven't had time to earn any rewards for it. We've talked about that with DeFi Carrot as well, right? Like there is a mint fee. This is how these protocols make money, and it sounds like a bad thing, I guess. But if you want these options to continue, these protocols have to make money, otherwise they'll go out of business.
Yeah. So just do some back of the napkin math. Check the APY and check what the fee is in percentage or dollars and cents based on how much you want to contribute to determine how long you'd need to keep in to be profitable at this rate, and whether or not you're likely to do it for that long. Because if somebody's like planning to trade this up and down and up and down, you might want to unstake it. Sorry, go ahead.
No, the cool part about this whole thing is that those numbers are relatively small and those durations are relatively short. The fees on these things are extremely low, but they still exist, so they need to be taken into consideration. But that's it. That's the entire process right there.
Well, and the other cool thing about it is you don't necessarily need to unstake, trade your Jito Sol back for Sol to start using it. We can
Correct.
talk about this next week, but I know, Matt in our community was talking about swing trading. Matthew, you can, instead of swapping back to sell or buy SOL, you can just keep buying and selling Jito SOL.
Mm-hmm. Absolutely.
And do what Alex does with his SOL. Buy it low, sell it high, and then when you're ready to get your SOL back, you just unstake, pay the fee one time.
There's a concept with all of this, which is the idea of compounding, right? Like, what can I do that fits inside of my risk profile to constantly make my money work as hard for me as I want it to, right? So banks, you deposit money in a bank, and that bank is going to take that money and create a whole bunch of versions of that money and split it up and do all sorts of different things with it and lend it out to a whole bunch of different people that they can all charge an interest rate to, because they want to compound how much they can make off of your money, right? So they fractionalize it, they lend it out, and they charge people an arm and a leg for it, and they make a shitload of money, hundreds of billions of dollars a year. This is the same thing, but under the hood, and you're doing it. So the name of the game is compounding. If your Jito SOL is accruing value because of the rewards that go into that token to make it worth more, which is how staking rewards get paid to the token holders, the more that you do to get more Jito SOL instead of just getting more SOL compounds the rate at which you're earning money, because that SOL, or that Jito SOL, is accruing value more than just the SOL. If the price of SOL goes up, so does the price of Jito SOL. And it's also increasing in value versus Solana because of the rewards that go into it on top of the price of the asset increase. It sounds like a lot. I know that this is like, the more that you get into it, the more that I like realize as I'm saying it, like, dude, there's so much here. It's very overwhelming. I totally understand that it sounds like really intimidating. But like I said, the name of the game is compounding, and you can kind of stop it. And this is a ladder. And you can climb up to rung number 1, and you're still doing more than you would be if you're standing on the ground. But you don't have to go all the way to the top if you don't want to. The higher you go on the ladder, the more likely you are to fall and break your leg. It's the same kind of idea.
And on that note, that's exactly why we're doing this as a multiple part series. So let me say, if you've enjoyed this or you need a little time, then go back. We're going to have this forever on YouTube, wherever you watch, whenever you listen. And thanks to our friends at Jito, partners of the show, we will be back next Wednesday. Or if you're watching in the future, you can click into the playlist to see the very next part in this series, where we'll continue to show you how to do more with your SOL, with your JSOL. We'll talk about MEV, and we'll get a little deeper into DeFi next time. So it's about that time we ride our dogs and ponies into the proverbial sunset.
Evan, I'm going to rug you.
Rug me, Alex.
Just to say, I've seen a couple of questions come in about going back over stuff, or, what about this wallet or that wallet? If you have any lingering questions about any of this, like Evan said, I'm not allowed to tell you anymore because Evan wants to dangle the proverbial content carrot over everybody's head for a week.
It's time to go.
It's time to go.
Yeah,
I gotta go.
He's got a job. I got to do some stuff for that job. So what are you going to tell us? What are you going to tell us? I did forget to tell him about the community too. I knew you were going to do it.
Yeah, hop over to community.rumshq.com and tag me, and you can ask any lingering questions that you have about any of this, and I will go through and get you answers. So if you're there it is. If you're missing anything, or if you have any lingering questions and you couldn't wait until next week, I don't blame you. Then you can ask us in Circle, and we can go through a whole bunch more stuff.
That's right. And we will definitely see you then. Okay, Will, you've got a bit of breaking news. You've got a final thought to do, and then we'll all do a quick final thought, and we'll get the heck out of here. Take our dogs and ponies into the sunset. What have you got for us, sir?
Morgan Stanley has also, I was just waiting for the horses to go by. Morgan Stanley has also just filed for an Ethereum ETF as well. I thought it was odd. It was just weird that like yesterday they're like Bitcoin and Solana, and I was like, well, why not Ethereum also? Do they really like Solana more? But now they also filed for an Ethereum ETF. So I was like, okay, that makes sense. So just FYI. Morgan
like maybe
Stanley
somebody just forgot it fell out of the folder on the way to the exchange.
Yeah, exactly. They still do things paper-wise. Some intern ran it from room to room, and one paper just fell out and the wind took it. So yeah, there's that. That's cool. That's great.
Did the ADP number come out, Will?
It did, but I don't know what it is.
Okay, we'll find out. We might check in on that one.
They're much bigger fish right now. That doesn't really necessarily matter at the moment.
Okay, we'll check in on that one after dark. Alex, I shudder to ask you, but have you got one last final thought to No Jito questions allowed. I'm just kidding.
No,
Jito,
I wouldn't want
love
to
you and I love your
overstep.
coffee cup. I wouldn't want to overstep. Listen, man. I want myself. What do you want from me?
DeFi is inevitable. Do DeFi. Do DeFi stuff.
Beautiful. And come back for Trust Issues. Alex can't get enough streaming. He's going to be here at 2 Central, 3 Eastern, or wherever you are whenever you listen in the future to talk politics, policy, and crypto where they all intersect. And of course, join us on After Dark tonight. We will start at 7 Central, 8 Eastern. We'll go for a couple of hours with co-founder of Tether and Wax, our friend and yours, William Quigley. Thank you, everybody, for being the very best part of what we do. We'll see you in the community, and we will see you next time. Until then, my friends, stay safe, be well. Everybody,